Constantly making profit from stocks is possible, but not easy. An easier way to secure your financial future is to buy and hold certain ETFs for a long time. There are 5 ETFs that you can earn good income in 2024 and on. For each ETF, we will see its holdings and how much is capital appreciation and dividend income from investing in 10 and 20 years with an initial investment of only $10,000. At the end, we will show you the ETF that could potentially add over $120,000 to your portfolio and generate $2,037 per month. Here are the top 5 ETFs ranging from the modest to highest return. Number 5. Vanguard High Dividend Yield ETF, ticker symbol VYM. This ETF is designed to match the large cap value segment of the market, which is the equity of companies with a market capitalization of $10 billion or higher. Large cap companies usually have stable cash flow and they are less volatile than most stocks. This would give investors peace of mind. The fund is currently holding 450 companies, which is very diversified, and the risks are distributed among all companies. Unlike the other dividend ETFs, this one is mainly focused on finance, electronic technology, health technology, and consumer non-durables. These companies are not expected to have a very high growth in the coming years, but they are reputable companies that have good tracking records for years. Companies like JP Morgan, ExxonMobil, and PepsiCo are very well-known companies that have had decent growth and dividend increase for years. The cost of this fund is at a very affordable rate of 0.06%. The dividend yield is 3.05%, but the dividend growth rate in the past 10 years is 7.12% per year. This is excellent for dividend ETF. This growth rate can definitely beat inflation. For a $10,000 investment, you would have $22,869 in your portfolio after 10 years. The annual dividend you would receive is $737. This is $61 per month. 20 years later, your investment would grow to $58,331. The annual dividend is $2,000, which is equivalent to $167 per month. Number 4. iShare Core Dividend Growth ETF, ticker symbol DGRO. This fund tracks U.S. equities with a history of consistently growing dividends. Companies must have 5 consecutive years of dividend growth to be selected. With 420 companies in its portfolio, DGRO includes tech giants like Microsoft and Apple. Both have experienced very high growth in the past decades while still paying out dividends. We also see some blue-chip stocks like JP Morgan, Johnson & Johnson, and Chevron who have great tracking records of paying dividends for years. Similar to other funds, DGRO has financials, healthcare, industrials, and consumer staples as top sectors in the portfolio, which ensures the stability of the index. The plus side is that the fund has 17.31% of the portfolio in the information technology sector. This combination guarantees the growth of the index, along with dividend distribution. The expense ratio is also at an affordable rate of 0.06%. The dividend yield is 3.05%. Amazingly, the dividend growth rate is at 10.18% per year, and the 10-year share price appreciates at 8.28% per year. For a $10,000 investment, your portfolio would grow to $26,792 with an annual dividend of $968. The average monthly dividend payment is $81. At the 20-year mark, the investment would grow to $84,845 and the annual dividend is $3,700. Every month, you would have $308 dividend income. Number 3, we have WisdomTree U.S. Quality Dividend Growth Fund, ticker symbol DGRW. This fund is investing in large-cap dividend-growing companies. Top 4 sectors are information technology, healthcare, industrials, and financial. Similar to DGRO, DGRW includes a much higher percentage of information technology in the portfolio, 28.15%. This is almost a third of the whole portfolio. Tech sector was booming in the past years. In 2023 alone, Microsoft and Apple have experienced 48.2% and 56.8% in growth. These two stocks are the top two holdings that make up 12% of the overall portfolio. Therefore, the fund had a remarkable growth of 22.32% in 2023. Most dividend ETFs do not have such great performance. The second place, healthcare, and the third place, industrials, are taking 17.55% and 13.39% each. To add them up, they are about one-third of the portfolio as well. While its dividend yield may be lower compared to other ETFs, which is only 1.69%, its growth potential is promising for overall portfolio performance. Compared to the previous funds, this one is more volatile, so the return is bigger. Despite the lower dividend yield, the fund has an impressive dividend growth rate of 14.02% per year in the last 10 years, and the share price appreciation is also at an outstanding rate of 10% per year. The expense ratio is also slightly higher at 0.28%. For a $10,000 investment after 10 years, your investment would become $27,705 with an annual dividend of $668. The monthly dividend is $56. 20 years later, the investment would grow to $93,719. The annual dividend is $3,330. The monthly dividend is $277. These three ETFs pay good dividends. But the next two ETFs will pay you significantly more dividends and earn you over 10 times of what you originally put in. Number 2, Schwab U.S. Dividend Equity ETF, also known as SCHD. This ETF has a solid track record over the years. In the past 10 years, the fund has given an amazing return of 10.87% every year. This is very close to the S&P 500 with a 12.58% return. By looking at its top 10 holdings, it is not just full of traditional dividend stocks like Coca-Cola, but it also owns semiconductor stocks like Texas Instruments and oil giant Chevron Corp. Texas Instruments specializes in designing and manufacturing analog and embedded processing chips. Semiconductor has experienced huge growth in recent years. As the development of artificial intelligence, also known as AI, the demand for semiconductors is expected to grow rapidly. On the other hand, Chevron is paying great dividends over the years. Similarly, Coca-Cola owns the pricing power in the market, and it has increased dividends for 61 consecutive years. Due to the market shares of these companies, they are the leaders in their respective fields. They all have the great dividend growth that beat the inflation. As a result, SCHD is the best of both worlds: high share price growth and high dividend yield. The current dividend yield is 3.48%. Like those ETFs we introduced before, the expense ratio is 0.06%. In the past 10 years, the dividend has increased 10.87% per year, and the share price appreciation is 9.29% per year. Based on this data, your initial investment of $10,000 after 10 years would grow to $30,036 with an annual dividend of $1,203. This is equivalent to $100 per month. How about 20 years later? The investment would grow to $107,451 with an annual dividend of $5,036. This is equivalent to $420 per month. Number 1, iShare Core Dividend ETF, ticker symbol DIVB. This ETF was launched in November 2017, so it is really new to the market. Over the years, the ETF has experienced high growth in both share price and dividend distribution. When it was launched, each share was $24.97. Now it is at $42.73 per share. This is almost double. In the past 5 years, The dividend growth is at an amazing pace of 16.37% per year, which is higher than most dividend ETFs. Out of the top 10 holdings, 5 of them are in the information technology sector. They are Cisco, Broadcom, Texas Instruments, Qualcomm, and International Business Machines. These 5 companies comprise 18.46% of the portfolio, and they all performed very well over the past decade. The top sector is information technology and holds 24.61% of the portfolio. It is expected to bring more upside if the market rallies. The other 3 are financials, healthcare, and industrials. They are offering great dividends and stability to the fund. The current dividend yield is 3.14%. In the past 5 years, the dividend growth rate is 16.37%, and the share price appreciates at 6.84% per year. Interestingly, the expense ratio is 0.05%. This is the lowest among all 5 dividend ETFs. For a $10,000 investment, it would grow to $36,593 after 10 years with an annual dividend of $1,894. This is equivalent to $158 per month. How about 20 years later? The investment would grow to $138,080 with an annual dividend of $24,445. This is an average of $2,037 per month in dividend income. These are the 5 ETFs you should invest in 2024 and on. Based on your investment goal, you will find one that fits your unique situation. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.